All right, let's go ahead and exercise our analysis for the daily direction. Always starting with the weekly chart. Obviously, we're still very bullish. However, it's a red candle. And when you come in and it's a red candle, you mark out the previous week's high and low, and we're in the middle there. It looks like it's heading down. On the weekly chart, we have a macro direction of up, but in a more closer direction. That's the macro. Micro direction of going down. So then I go to my daily chart here and I look for further indication. Very bullish in the long term, but on these red candles, you can't. It's very difficult to go long just because the daily chart's long or the weekly chart's long. Okay, we have to take some sense into understanding that the candle is red. All right, this is where we're at. So let's keep going down. We see some draws on liquidity lower on the 240 minute. That's the 4-hour chart. It's very sensible and reasonable that this could go down and sweep these lows down here. Very sensible, and still be in a daily bull or weekly bull trend, right? All right, here's the hourly chart. And that's a strong move down. On the hourly chart, we see this thing come down. We have been seeing even these dips below the 200 moving average right here. These are the days that going long, you're basically just waiting to catch a falling knife. Hopefully you'll get a good price. You got to go with the trend. And when the trend, the trend on I always say I follow the 15-minute chart. And the hourly chart is very, very indicative of which direction we should be going as well, right? So when we look at the hourly chart, it's below. It's pushing below the 200 moving average. And the moving averages have crossed, the 20 and the 50 have crossed, and price is consolidating in the danger zone. It's pushing below the don't go long zone. Don't go long if it's under the 200. Now, we are trying to trade with the trend, okay? And again, the direction from the higher time charts is telling us down. A lot of times that's when it's going to reverse, and we know that. But you got to just be patient. Sometimes if we're not sure, just don't take a trade, okay? Don't take a trade. But the main charts we follow are the 15-minute. Which way is that going? It's going down, right? And the 10,000 tick, it's basically very, very similar to the 15-minute. So it's just a tick chart of the 15-minute, but a lot of times it looks smoother. And so which way does that look like that's going? That looks like that's going down. So my bias is down. My bias is that it's going to keep going down. And if I can't find a good trade, I just will stay out of the market. So the same entry principles, the same A-plus setups, the same strategy, same risk management. It all applies to the downside as it does to the upside. So we're looking for all of our time charts from, well, let's just take a look from the 15-minute here to the 5, down to the 1, to the 1 minute, and which is down. And we're saying, okay, which way is price going? Price is going down. Which way should we be trying to take our trades? In the down direction, okay? And so we get the minute charts out of the way here, and just go to I just use the the tick charts a lot more. Price looks smoother on them. You get the same peaks, the same highs, the same lows. But I follow the 10,000 tick chart more than anything when it comes to which direction. Which direction is this thing going? Okay. Then I drop down to the 5,000 tick and the 2,000 tick over here just to get some details. And the 1,000 tick is where I like to take my trades. I'll take my entries on the 1,000, which is like the minute chart. The 1,000 and the minute are very closely related. Okay. So right now, we would probably be looking for trendline breaks to the downside, which means a trendline break that breaks to the downside. Usually we're going long and it's bullish. We would be looking for the opposite direction. Here's a trendline break to the downside, and so on and so forth. Okay, so let's keep an eye on it. Let's wait for a pattern to develop, and hopefully we'll be in the right direction and be able to get a short trade on this today. All right, I'm going to give it a shot. I'm going to give it a shot. Let's see here. I'm taking a riskier trade because I'm taking it on the 250 tick chart. The 250 tick chart has broken the trend line, and it has come up into a place where fair value gaps have been. It could definitely go up over the top of this pivot before going down. It could definitely keep going up. I was thinking about waiting until this fair value gap was tested on a 2000 tick chart here. That might have been a better way to do it. I'm looking on the 5-minute chart right now to see what we got. Yeah, it looks like on the 5-minute chart here, we have a fair value gap right here that it came right up into, and that would be pushing up against the moving average as well. So this is a good area for it to try to come back down. But, you know, the idea is that we're going to try to shoot it back down to the low here, or at least get 2-to-1 on it and see if it works. I'm okay with this trade. I want to take high quality trades. Everything's going down. All the moving averages are going down. It came back up to, 50% of this drop here into a fair value gap, into some moving averages. So I'm thinking it's possible that it's going to keep going down. Now, my goal here is to hold the trade and to make sure that I don't get out too early. Okay, so that's always been my challenge. So I'm going to have to keep on trying. Looks like we're going pretty good here. I'm trying to get my, all right, I should break even now. Okay, I'm on break even because it hit 1-to-1. And I'm just going to let this thing work itself out while I'm on break even. And I could take 1-to-1 on it, but to be honest with you, I want to see if I can get 2-to-1, which would be better. So yeah, you see how it hit 1-to-1. This is my first target. This is my second target down here. I could actually put this on target 3. I just hope it doesn't come up and stop me out for 0, because I hate it when that happens. If it does, it did. It stopped me out for break even. Then somehow we got to figure out how not to do that. But I'm going to keep watching this trade and see if it would have worked out better if I would have just left my stop at the top. But why did we take the trade short? Well, all of our time charts are saying down. We're looking for a good entry where it pulls back at least to some degree from the last leg down, from the last move down, about 50%. It comes back up into a fair value gap on different time charts. 5-minute, 2000 tick, 5-minute chart. You see this pullback, this fair value bearish full value gap, FVG. And so why not give it a try? Okay. The only thing I was concerned about is getting in on the 250 tick chart. Here's the 1000 tick chart. And I probably could have gotten in a lot better, a lot higher if I was paying more attention. Let's see. Right here would have been good. It didn't quite hit 2 though. It didn't hit 2 on it. So it did hit 1 risk no matter which chart I used. All right, we have the opening bell right now, and it looks like it would have stopped me out for a loss had I not broke even on that. I really do like to break even when price gets to 1-to-1, and that's why. And it may continue to go down, but we'll have to keep an eye on the overarching, the hour chart. We got a nice strong bounce off of a fair value gap. That's another thing, when you get conflicting signs, where you see it pulling back. Oh, I don't know. Let's take a look at the Fibonacci levels here. We've got it pulling back, down into the 62% range on a bullish 4-hour chart. You got some pintails developing down here now, and it did pull back into a fair value gap on the 4-hour chart. So when you see that, you got to have some caution. I think I could have gotten a 1-to-1 on this. Maybe if I would have just noticed that, hey, it's a little conflicting on the higher time charts. Just take a little profit. Don't try to hit the home run, because it's not as clear as you might think it is, right? So that's something to consider. When the trade has an open run and it looks great on all time charts, then I think it's better to go larger in position and shoot for a higher target. But when it's mixed signals, that's when things need to be with caution. Either not take the trade or take the trade with, a shorter target of profit, All right, so I guess I'm just going to keep watching. I do have to pay attention, though, that, I think it wants to go lower. I think it wants this pivot here. Let's look at the day chart again. And it's still got quite a ways to go before it's at 50%. It can go all the way down to the 20 moving average. But if it's ready to come down to these pivots, down to this area, maybe to the 50 move EMA and then back up, I'm not saying the bull run's over. I'm just saying the correction could be deeper, and that's what I'm looking for. All right, talking about this every step of the way, and as I watch the video review, it's just helping me make better decisions in the long run. You see on the hourly chart here, why would we go long when it's trending down? And there's this liquidity sweep area right here that's just waiting to be swept. It makes more sense that it might go down here before coming up to this newly generated buy liquidity. I'm really trying to make my mind up about going short here and the exact entry that I need to get in. Understanding when to switch directions is an important skill to have. But I cannot go long based on my Matix strategy, moving average trendline ICT strategy. If the 15-minute or the 10,000 tick chart, I can't go long if it's underneath the 200 moving average. Okay, and price is there's plenty of opportunities to catch trendline breaks when price is going in the right direction. There's plenty of opportunities. Even this right here was a great day for me because it had closed back up above right here. When it started closing back up above, this was a good day. When price is trending underneath, this is not a long for me. I'm not looking for trendline breaks down here to go long. I'm looking for trendline breaks to go short. So that's where we're at right now, is we're looking for something to go short. All right, let's take a look at this. Let's keep examining it. But there will be a time, and maybe not today, where things change. And we will see signals to go long. On the 15-minute chart, if we follow the 15-minute chart, we want everything to get back up over the top. Start right over here, even as it was down below. We weren't looking to go long when it was trending down lower. As soon as it comes up, though, now we're looking for longs, long positions, trendline breaks, wedges, things like that. When it's trending down like this, or even over here, as long as it's above the 200, why not try to look for longs, right? Of course, it's a little tricky when the moving averages cross under one another here. It's still above the 200, but the 20 has crossed under the 50. The 20 crosses under the 50, that's a caution. And then when price goes underneath the 200, then that's the danger zone. As far as trying to go long, now it's time to go short. Now we need to be looking for shorts. Okay, and right now it's really just unbelievably sideways. So if this is the indication of what kind of day it's going to be, then we may not get a trade at all. All right, an area we have to watch is this white line right here. This is, let's see, the low of the previous day. The low of the previous day is a very important line. You can see that it broke below it, trended down, couldn't hold back and forth, and now it's been under. So it'd be interesting to see what happens when it gets anywhere near that line, if it does. We might see a better opportunity to go short coming up here on the 2000 tick chart, but I still am having issues with the choppy sideways activity. Because of that, You know, I took my shot over here. It was clean, and we could have gotten 1-to-1 on it. Right here, we could have gotten 1-to-1 on that drop right there. We took it when the trend line broke. It went up into a fair value gap on higher time charts. Everything's pointing down on all time charts. It did give us a 1-to-1, but then we broke even on the up when it ticked back up. And now it's nothing but choppy. This right here can get you into trouble right here. And of course, it could just take off and go down, and we could miss the trade. But this is the kind of like what it's doing. It's accumulating on both sides. And there's an interesting. Looks like that's gonna. I bet you this goes. Let's watch this accumulation. This is one of those patterns that I like to see for momentum to the downside. I bet you it goes down. I'm gonna say it's gonna go down at least a little bit here because of the pattern I'm seeing. Let's say if I were to take a trade right here, I'll do some paper trading here. My stop there. Say I take a trade right there. Stop is above this consolidation candle right here. I don't like to take trades on the 250 tick as much. Well, if I had taken that trade, I would have been stopped out. So I just wanted to do a mental trade on it, and not a real trade, because I wanted to test my thinking and see, because this didn't continue down with this pattern that I see, consolidation engulfing momentum trade. It only went down here and came right back up. This is very, very dangerous. So it just confirms. It just confirms. I mean, it's in a range, and it can go either way. It can go either way. And so right now, I think the best thing is just simply not take a trade at the moment. Okay, this looks like the exact same kind of situation where we're getting like a consolidation candle, and if it jumps down past it, you would think that it's going to keep going. It'll probably sweep these lows here. But here's a trend line break on the 1,000 tick chart. Failure to rotate up higher off of the moving averages, and created a fair value gap right here. It hasn't gotten into it yet. So we're watching for the short, and I just don't want to take the trade if the market's choppy. And it looks like it wants to start to continue down now, which would be great. I don't want to take a momentum trade. I want it to pull back. Here's some fair value gaps on the lower time charts that it's tested on the on the lowest time charts, the 250 tick, which is almost like a 15-second chart. This looks nice and clean right here on the 5,000 tick. That's why I like to look at different time charts. That looks really clean. That looks really, really good. I can't really chase it down here. I wish I would have got in on some of these. This right here would have been a good entry. Let it pull back there. Silver bullet session's coming up, which means this thing could make a move. I think it's going to go down to these lows. There's probably no question about that now. The question is, do I jump in blindly and try to ride it down to those levels? It's so close to those levels now. Go back and see how I could have tried to get into this trade better. I thought it was going right here, but it wasn't done yet. It wasn't done going back up. What did it do? It went up to this. Okay, it went up to this fair value gap area here. It tipped into it. Take a look at the 15-minute chart. There's a fair value gap right here. It went right up into it, created some pintails. Of course, that's over a bigger picture. 5-minute chart here. 1 minute. Let's see what that looks like. Yeah, there was a fair value gap on the 1-minute chart, but you know, it's hard because it's in this choppy. You don't want. It's just basically coming off of this bottom right here. When I was looking at it, it basically came off this bottom and went back up into the range. There's no way of knowing for sure, but that fair value gap and the way it ticked in right there could have been a pretty good, guess. I think it's good to point out that it is making lower highs right here ever so slightly, and it is below that previous day's low. That white line keeps telling us where the previous day's low was. All right. So I'm hoping that we get another chance. Maybe it'll come back up under this range, create another lower high. We'll be looking for lower and lower and lower highs here, and give us another trend line break to the upside. We'll see. That is yellow. I think I would have taken this trade short if it had came up to this fair value gap area one more time on that bounce, or even on this bounce. Right in there, I would have taken a shot. Now, let's see, is it at the low here? It's almost there. It looks like it just ticked it a little bit. It has not broken. It is a double bottom perfectly, which a lot of times means it's going to definitely break it at some point here. Will it break it immediately, or will it rotate up? If it rotates up, we can look for another trendline break to the downside as an entrance. If you're a momentum trader, you could probably just jump in it right here when it breaks out and use some candle as your stop loss, but that's not our strategy right now. We're looking for a trendline break, a pullback, and a fair value gap. If we get all that, we have a decent trade. And looks like we did have that on. Let's look at the 15-minute chart again to examine what we're looking for here. All right, there's a fair value gap right here that it came up to. Trendline break would have been something like this. Now, seeing that on an entrance like a 1-minute chart, that's a little trickier. Yeah, I guess we could have noticed if it had pulling, it went into the fair value gap in this area, tapped into it, and then it started to break the trend line, but catching it at the right moment. See, it broke the trend line here, and then it went right back up. There's a turtle soup trade I'm sure some people are taking. Once it sweeps the bottom on a turtle soup, you look to enter in down here, and you use your, there's different ways of doing it, but keeping these peaks your stop loss area. Try to ride it up as high as you can, break even right now on the trade. Now we got, it swept the bottom here. So now that it's swept the bottom, it's either going to continue to go to lower bottoms, or, you know, it's done for a while. So let's take a look at the 60-minute chart here again. I said it was going to come down here and sweep these. I think it still is. Come down into this area down here. And it's flying, and we missed our trade. I wish I could. I guess today is going to be all about how could I have gotten into this. Thank you. Look at that target it would have hit. Goodness gracious. Third target already on this. So my big focus today is going to be how can I have gotten into this trade. I'm going to go back and see. You know, it's a lot different in real time than going back and watching a chart, because the observance of this choppiness, the way it was chopping around right here, you know, studying the 15-minute chart and looking at these pivot levels, you know, thinking that it's going to go sweep those it's tough, because there's some serious order blocks down here. There's some breaker blocks, fair value gaps that haven't been tested yet. I mean, if we really are in an extremely momentum bullish market, these are great areas for it to go back up. Instead of breaking these to the down, here's another breaker with a fair value gap that has not been tested. So I think shorting it down to those areas, but now it's so close. I really, really, really think we missed our trade to the upside, or to the downside. I think we missed it. So let's take a look at, instead of crying about it, trying to chase it, I'm not going to do that. How could I have done better on this trade? Getting more and more experience with this stuff, the choppiness, the delay. What are some of the signs I could have been looking for? I could have noticed that it did pull back into a fair value gap on these charts on the higher levels. We noticed that it was underneath the low of the previous day. We could have noticed that it was making lower highs here, which is a good sign, right? And it did break a trend line, but not until it went sideways for a while, which it's not the best trend line break, but it did break the trend line. Let's take a look at, first we're drawing them like this, and we did get a 1-to-1 return on that, except it broke even. But and then we're drawing it each time. We draw it, you know, more like this, and when we see price chopping like this, it gives you caution. but it failed. It kept failing, and it kept creating lower highs, which is something I need to make sure I understand right here. Okay, it finally broke right there, came back up into a fair value gap, and started to rotate down. So this is the best area. This is the best area. Let's go ahead and circle it up so I can understand that better. That's the best area. What is that going to look like in the future to me? I was ready for it to come back up into this fair value gap here and take a trade. I was. And there's one here too. Now, I want to study this area right here. And I want to see what I could have done differently in that area to catch this trade. Oh, what a beautiful move, actually. Here's what it looked like on the 5,000 tick chart. That's the area. And once it broke that, on this 5,000 tick chart, once that closed, that is the area. It never went back above that trend line on that chart. Let's see what it looks like on the 2,000 tick chart. Okay, so paying attention to where it actually closed on multiple time charts. I did not do that. I did not go to the 5,000 tick chart and noticed that there was a trend line where price had closed below the trend line. I did not notice that. No matter how you draw it either, it's interesting. Very, very interesting. Okay, so I'll need to make a note of that in my mind and on the chart. Let's take a note. Write it down. That way we can remember what we did. I did not use higher time charts to see the trend line break. I was basically just concerned with the 1,000 tick and the 2,000 tick right in this area. I didn't really hop up here and go, how is that looking on the 2,000 tick chart? Where are we at? Price came right back up into a fair value gap in between these two descending and expanding moving averages. Yeah, that would have been a beautiful entry right there. So that's where I got to get it next time. I got to get used to price moving around and chopping and going sideways, but yet developing an overall theme and how all the multiple time charts are telling me a story. It's telling me a story, right? And this is how we get better and better at this as time goes on. We get better and better at this as time goes on. It's definitely possible to go down and, if we're going to get a major correction here on the daily, it's definitely going to break those pivots. On the daily, we're still looking at this kind of activity right here. It hasn't really closed more than 2 red days, or it hasn't closed more than 2 red days since way back here. And when it did have multiple days, it only pulled back to the 20. It pulled back into the caution zone, but then immediately took off. It hasn't been back into the caution zone, and it's probably time to come into the caution zone. Caution zone is between the 20 and 50, and it's dropping more and more. I'm pretty confident it's going to go down. I just need to get some kind of entrance, and you don't want to buy it. The problem is, I think we missed it, because you don't want to necessarily get into the trade when it's this close to some of these pivots. I want this thing to rotate up. All right, look how far away it is from the 20 on the 10,000 tick chart. So it's pretty far away. So it needs to rotate up and come into some of these fair value gaps up here. So that's the goal. All right, let's rephrase that. I need to see the 15-minute chart here, and I want to take a look at what we have as a possible entry. So there's a big fair value gap right there on this 15-minute chart. Change the color of this one just to make sure we know what we're looking at here. This is important because we're setting up our trade. We're setting up the parameters of our trade. We're saying this is what needs to happen before I will take a trade. On the 5-minute chart, we see the same box. We see the area that it has to pull back into. And if it doesn't, it doesn't. We can't just jump in on this. So here's what we're looking for. Come back into this box right here. And we'll take a trade if it sets up right and if it breaks a trend line. And it looks like it's going to come down to these pivots here. You see, I used to try to just counter trend trade, and I would take a trade like this to the front that's all trending down, and I would try to buy it on the upside. You know, and I guess that's a good strategy for some people. Some people make a living off of counter trend trading and buying off what they're calling the support and resistance levels. And if it works, it works. That's great. But this Maddox strategy, moving average trend line ICT strategy, is going with the trend. All right. It's not trying to catch counter trend trades. And so I'm okay with that. And I need to know that I can't take every trade. I need to know that what I'm trying to do now is focus. All right. I want to focus. I want to focus on one strategy and make money with it. And then I'll move out and expand into other concepts and ideas. So you see, we need to get this back up to this box that was drawn here. This box up here, this lighter colored box right here, if it comes back up into that area, we can look for a short trade, right? Now there's two ways of going about it. One is just taking the trade into the fair value gap, the FVG, and then not waiting for the trend line break. Okay, you don't have to wait for the trend line break if you're using some of the ICT strategies. But I'm combining moving averages, trend lines, and ICT strategies. I'm combining them so that I have more, in my opinion, more confluences. I'm keeping an eye on the 15-minute chart, the fair value gap that was created on that 15-minute chart into that area. That's the number one area that I'm watching. It's coming right up into it. As soon as it hits that box right here, it will have started to enter into that area. Right? Keep an eye on the trend line. It's getting more and more momentum. And I needed to get into that fair value gap area before I really can put my trust in it in the trade. Now, it's breaking the trend line right now. It's hitting the 50 EMA. Unless I'm not reading it right. I mean, it could break right here. It could be a trade to where I think it's going to pull back more though. We can see on this last leg down, we want it to come up at least 50%. Right? So 50%. It's still got to get it. That would put us right into that box. Okay, 50%. So I would not be surprised if it goes up over the top of the EMA, over the top of that pivot. And I need to see that. I'm not going to take a trade outside of that goal. See, it's not in that box yet on the 10,000 tick chart. And it may not go, but that's where I've got to see it get up there. This would have been a good trade, but it's not an A+ trade. It didn't, in my opinion, go into the 15-minute fair value gap, which is what I was waiting for. I'm checking the 5-minute chart now to see if there was anything, and there is on the 5-minute chart. Probably could have used the 5-minute chart. I was pretty stubborn about that 15-minute chart, though. That fair value gap right there. There's one there, which gets us back up into that box. And there's one here that it pierced. It pierced all the way through it completely. Well, this dash line is a pivot level that works also as See, it's hitting that, it hit those pivots there. So there's different things to use. I guess that would have been an interesting area to try, at least keeping the stop loss very, very tight. So I'm just trying to create my parameters for my trade, set up what I'm looking for, and sticking with my goal for the trade. And sometimes the parameters aren't going to work, and then I'll notice, like I just noticed these parameters. If I would have used these pivots, the 50 EMA, looking for a fair value gap confluence, it's not the only way to take the trade. I need to understand that there are other variables that can agree or harmonize with the idea, and that was this pivot, these pivots. Fair value gaps are great to use, but if I'm only waiting on it, I might miss something else. Of course, structure is an important variable. What did it do? It came up and hit this structure. It came up and hit the structure. It didn't go all the way up into the fair value gap. Okay, that's something I want to record and laminate in my mind today. If this is all I learned today to pay attention to, this is a good thing. Optimizing my trading strategy, daily practice, continuous experience, and trading the strategy and plan that I have laid out, controlling my emotions, and being disciplined. That's what we're doing right now. This is how we're going to get better by the grace of God. Thank you, Lord. So yes, we're still looking for it to come down and break those pivots on the 60-minute and daily charts. I still think it's going to go down there, at least to the 20 EMA on the daily chart, which has got a few more pivots to break it, even if that's as far as it gets. All right, so now we're just waiting. What could I have done here differently? Well, this is the second area that I could have done something differently. And I know what I could have done here. What I could have done here is, let's write it in the notes. I could have used, let's write it down right here. I could have used price structure instead of waiting for the fair value gap. Okay, that makes sense. So now I know what I did up here. Now I know what I did right here and why I didn't get into those trades. Go back and study, make the video, play it over and over, and get better and better. There's nothing for me to do now because this was my chance. I said I had to wait for something to come up and break the trend line to the downside. So, with great trade management, this could have at least broke even. I don't mind breaking even over and over and over while I'm trying to find a good trade. So yeah, I was too busy waiting for the fair value gap and not paying attention to this trend line. This is perfect structure break right here, and retest, pin tails, everything. I mean, and then it breaks the trend line. You tell me you can't take that as a trade? That would have been a great trade setup, and it probably would have got 2-to-1 on it. So definitely need to learn from this today. It's coming back up through those pivots again. And sometimes things only work for one trade. And then you get the trade, you take it, you milked it, and here it goes into this fair value gap area now. So if I were to jump in this, I would have to have an exit strategy. And I'm trying to figure out where that's going to be at here.
Order filled.
I'm gonna try it. Let's see what happens. It's into both fair value gap boxes. I think I'm just going to use that pivot at the top there. Just leave it where it's at, I guess. It's worth a try. It's bouncing off this trend line here. I'm taking my chance based on the fair value gap theory. The downtrend, all the time charts are going down. That's a strong candle, though. I don't know. I really don't. Like this is really pushing up hard here on the 1-minute chart here. I don't know if I should have my stop higher, and I don't really want my stop higher. It's hitting the 50 EMA on the 2000 tick chart. I don't know if my stop should be higher, 74.25. So yeah, it's up above that. All right, let's take a look at the 5-minute chart. Pushing up into that fair value gap. There's another fair value gap up there that I don't want it to come up to. Yeah, we don't want it to get that high. All the way up to the top of this box. See, it's in the middle. It's in this box right now. I need to keep my stop above this box, which is where it's at. My stop is above this box. It's above this fair value gap here, which is good. So it's above this 50 EMA. So I think that my stop is at a reasonable spot. I really do. Now it's just let the trade play out. Even if it stops me out, I'm in a decent area to take a short on it. I just hope my stop's high enough. That's the only problem. We'll see what happens. All right, the hard part too is if you do get a trade that goes in your favor is holding the doggone thing and when to go to break even. How did I do this? I didn't put this out right. Let's mark this up. My stop loss is here. My entry is here. Yeah, my target is right down here. So when it gets close to that, I'm going to break even, man. It's almost there now, so I'm going to move my stop to break even. That's how I like to do it. If it hits my target, great. I'm on break even. Let me put it down to target 2 because I'm on break even now. And this is my second trade attempt today. First one was break even, and then we missed a couple of good setups. We missed them, and this is my second real trade using the demo account. I'm already on break even, which is great news. So let's see what happens. Hopefully we'll get, target 2 hit. That'd be great. There, target 1 would have been hit. Hold the trade. Let the trade work itself out. Let the trade work itself out. Keep going. Target 2, come on. This is the hardest part about trading, everybody. This is the hardest part about trading. What's good is that we see on the 15-minute chart, it went up into that fair value gap, and that's put in a nice pintail. That would be great if it just turned red and kept going straight down. I've got my stop in place. This is the second trade today. And the first one was on break even. And then we missed a couple of good opportunities. This is my second real trade, and I'm hoping that it hits target 2. This is just something I'm going to have to live with. Breaking even is way better than a big loss. We're getting the trade directions right. It's just not going to target 2. And that's okay. So far, if we break even on this, then that's fine. 1,000 break evens and 1 home run is all you need. If we take a look at the 5-minute chart here, we can see just how choppy this is. I was almost going to take my profit at 1 because of this behavior. And I guess what I'm trying to say is having a firm, disciplined mindset on holding and letting the trade play out is a general rule of thumb, and it's very, very smart to do that. However, when the markets are behaving in certain ways that are uncommon or unusual or give you a sense of understanding that is not in the general sense, I don't think there's anything wrong with necessarily taking an early exit. An early exit may be the right thing to do. So I want to also understand that as maturity comes, that there's times when you just need to let the trade play out. And then there's times when you're interpreting or discerning the market behavior as too risky, and you can pull your profit off earlier. I mean, this is a very, very, very indecisive, choppy market. I'm working on holding my trade and letting it play out. And in general, that is a great idea. There's been times when I've gotten out too early and the trade went in my favor and I missed a lot of profits because I closed it too early. That's the general rule of thumb. However, with discerning wisdom as experience and time develop our understanding, there'll be times when we interpret the market behavior or price action as sketchy or indecisive or choppy. And it's best just to take that one-to-one risk, one-to-one reward, take it, and be glad you got that much out of it, because the behavior of the stock is not something I like to see. So right now, today, I'm holding it right here, and we're going to let it either stop me out or go back down. And I may take the one-to-one once it gets down there. I'm just not sure yet, but I will leave that as something, as a variable that's flexible. I want to be flexible on that. What I don't want to do is do what I've been doing, and that's take profits after it ticks green a couple of ticks. Get so nervous that I stop even. I break even too quickly, and it's ridiculous. You got to let it run a little bit. At least go to target 1, right? At least to target 1. And if you can't get target 2, take target 1, right? Take target 1. That's fine. So here we are. It's almost back to target 1. We don't know what it's going to do. It's chopping sideways. Here it comes back up again. Keep in mind, we are on break even with a little bit of green to spare. If it keeps making lower highs here, that's going to be a good sign. We don't want it to spike up and make a higher high in this little area right here. Just keep making lower highs. That's good. Well, when that candle right there started coming up, I had a feeling this was going to happen. It stopped me out for break even. I had enough to cover commissions. But when that candle created a pintail higher, I was almost going to take my 10, 12 bucks and get out of it. All right, third trade. It's gone up to some, looks like resistance areas, and it just seems like this is a good spot to give it a try. The hard part again is letting the trade work itself out. And again, I'm trying to figure out how to do that. Right down there's target 1, and I need to be pulling it into break even as soon as it gets close to it. Is what I like to do. Here's what it looks like on the 5-minute chart and why I got in. You see how it's just going into the danger zone for the bulls.
Target
They hit
filled.
my target. I'm so excited. I'm still new at winning, as you can tell. So yeah, we're only going for 1-to-1. I'm not going for 2-to-1 today. I've noticed I could have already had 1-to-1, and this is the second time it hit my 1-to-1. So if I was just taking smaller rewards, I could already be up 2-to-1. So anyway, that's the third trade. I'm just going to go back over why did I take that trade? Because honestly, when it went up there, it just felt right. And then I'm like, okay, is this a feeling or am I basing this on scientific reasons? In other words, is there a fair value gap? Is there structure? This is the 15-minute chart right here. You can see it tapped right back into that fair value gap box on the 15-minute chart. 5-minute chart, let's see what it's got. So yeah, there's this fair value gap right here that actually has been used a couple times. So I guess what I'm trying to say here is I don't want to just take a trade because it feels right. I want to go, okay, why did I take that trade? Yes, it worked out. I don't care if it works out. I want to know, did I take a good trade or not? Does that make sense? Because you can throw a dart and hit a trade that might work, but I want to make good scientific trades, high probability trades. And if we develop the sense of this is a good trade, even though I haven't looked at everything, maybe that'll come later. But I'm just trying to go, why did I want to take that trade? All I know is on the 15-minute charts what I saw at first. So let's start with that. The 15-minute chart looked like this. Price was going up into descending moving averages that are coming down. It failed right here before at that fair value gap. So when price came back up into that area at the moving average, at the fair value gap, at the pintails, at the structure, it just seemed like just from this chart alone. Well, I'm not really using this chart alone, am I? Because I already know that on all the other time charts, including the 5-minute, the 1-minute, all my tick charts are saying that this thing is in a bearish downtrend. So it's not like I'm only using the 15-minute chart and I've only looked at the 15-minute chart and that's what I'm basing everything on. No, we've been looking at this all morning, and including, let's take a look at the hourly chart here. Hourly chart. We still believe that these pivots are areas of interest for the market, that it's not within reach of it on the daily chart to go down a little bit more for a correction down to the 20 moving average. We know that already. Now On the hourly chart, it is below the 200 moving average with descending and crisscross moving averages heading in a downward position, right? So it's also part of the reasoning behind everything. I'm bearish biased today. But having learned from my first trade that could have been profitable, I decided to just take the 1-to-1 on the second trade here, or this is the third trade. First trade I could have got a 1-to-1, I broke even. Second trade I broke even. And third trade 1-to-1, I did get the 1-to-1 because of what's going on today. It may be as low as it's going to go today. It may hit those pivots on the daily chart in the next couple of days. So grab the 1-to-1 while you can. That's what I say.